This week in economics on the 27th of March 2016. Numbers man here. Interesting week. Of course, in the U.S. we had a holiday, but nonetheless we roll right on. Had quite a few numbers appear this week. We'll get right to it now. The third revision of GDP. We'll start out there. Good place to start. It was released on the 25th, which was Friday. Nonetheless, real domestic GDP, products of the value of goods and services by the nation's economy less the value of goods and services used up in production, adjusted for price change. Increased at annual rate of 1.4% in Q4 of 2015. That's according to the third estimate from the Bureau of Economic Analysis. In the third quarter, real GDP increased by 2%. The GDP estimate released today is based upon a more complete source, in other words, of big data. In the second estimate, the real GDP was at 1%. Largely the same personal income consumption, that is PCE, more than previously estimated on the revision. The increase in real GDP in the fourth quarter reflects positive contributions from the PCE, residential fixed income, federal government spending, that was offset by negative contributions from non-residential fixed investment, exports, private inventory investment, and state and local government spending. Imports, which are a subtraction in the calculation of GDP, decreased. The deceleration in real GDP as the fourth quarters primarily reflected a downturn in non-residential fixed investment and in state and local government spending, and deceleration in PCF, and a downturn in exports that was partially offset by smaller increases in private inventory investment. Real gross domestic income, that is GDI, which measures the value of the production of goods and services in the U.S. as costs occur, and the income earned in production increased 0.9% in Q4, compared with an estimate of 2% in Q3. The average real GDP and real GDI, a supplemental measurement in the U.S. economic activity, equally weighs GDP and GDI increased 1.1 in Q4, compared with an increase of 2% in Q3. This news release says, it's available on their site. Real gross domestic purchases as by U.S. residents, goods and services, whatever produced, increased to 1.5% in Q4, compared with 2.2% in Q3. The price index for gross domestic purchases, which measures prices paid by U.S. residents, increased to 0.4% in Q4, compared with an increase of 1.3% in Q3. Excluding food and energy prices, the price index for gross domestic purchases increased 1%, compared with 1.3% in Q3. Current dollar GDP, the market value of goods and services produced by the nation's economy, less of the value of goods and services used up in production, increased 2.3%. That's a good number. Our 104.6 billion in Q4, of a level of 18,164 $0.8 billion in the third quarter. Current dollar GDP increased 3.3%, or $146.5 billion. So there were some revisions. I won't go over this. From real GDP 0.7 that was in the advanced estimate. The second estimate was up to 1, and this is 1.4. Current dollar GDP 1.5 in the advance, and the second was 2, and now 2.3. You can kind of see the scenario here. The real GDP and real GDI at 1.1. There was no evidently advanced estimate there. Gross domestic purchase price index, 2 in the advance, 4 in the second and in the third. More complete data there. And I won't go into this. We'll get into corporate profits here. Profits from current production, corporations profit with investment valuation adjustment, nonetheless decreased $159.6 billion in Q4, compared with a decrease of $33 billion in Q3. Profits of domestic financial corporations, $24 billion in Q4, and is contrasted as to an increase of $1.8 billion in Q3. Profits of domestic non-financial corps decreased $129.2 billion, compared with a decrease of $11.8 billion. Yeah, it would be in Q3. The rest of the world, a component, decreased $6.5 billion, compared with a decrease of $23.1 billion. This measurement is calculated as the difference between receipts from the rest of the world and payments to the rest of the world. In Q4, receipts decreased by $22.4 billion. Payments decreased by $16 billion. Taxes on corporation incomes decreased $32.2 billion in Q4, compared with a decrease of $6.9 billion in Q3. Profits after taxes with IVA, and I won't get it anyway, nonetheless, decreased $127.4 billion, compared with a decrease of $26.2 billion. Dividend decreased $15.1 billion in Q4, in contrast to an increase of $26 billion in Q3. Undistributed profits decreased $112.2 billion, compared with a decrease of $52.2 billion in Q3. Net cash flow, IVA, the internal funds available to corporations for investments, decreased $101.6 billion, compared with $35.1 billion. For the year 2015, profits from current production decreased $64 billion, in contrast to an increase of $35.6 billion in 2004. Profits of domestic financial corporations decreased $2.3 billion, and profits of domestic non-financial corporations decreased $32.6 billion. The rest of the world component of profits decreased $29.1 billion. That's in 2015. Was a less stellar year than 2014. For the year 2015, taxes on corporations increased $15.9 billion, compared with an increase of $45 billion in 2014. Corporations did better in 2015. Profits from after tax decreased $79.9 billion, compared with a decrease of $9.4 billion. Dividends increased $28.5 billion, in contrast to a decrease of $64 billion. The undistributed profits increased $108.4 billion, in contrast to an increase of $54.6 billion. There used to be commercials on TV about dividends, and Many corporations still have dividends, something to look at if you're in that category. Profits of domestic financial corporations decreased 24 billion in Q4, in contrast to an increase of 2.5 billion in Q3. Profits of domestic non-financial corporations decreased 132.7 billion, compared with a decrease of 11 billion there. The fourth quarter decrease in profits of non-financial corporations primarily reflected a decrease in manufacturing of non-durable goods, specifically petroleum and coal production, which had went down the whole year. For the year 2015, profits of domestic financial corporations increased 19.5 billion, in contrast to a decrease of 0.2 billion in 2014. So thus, those corporations were in the positive. Profits of domestic non-financial corporations increased to 146.8 billion in 2015, compared with an increase of 36.8 billion in 2014. The 2015 increase in profits of domestic non-financial corporations was widespread across most industries. Notable offsets include a decrease in manufacturing of petroleum and coal production and in utilities. Gross value added of non-financial domestic corporations. Business real gross value added there increased in the fourth quarter. Unit profits from current production, profits per unit of real gross value added decreased, reflecting an increase in unit labor and non-labor costs. So that does that. There was an article in Reuters. I'll just go with just a little bit here. Consumers prop up U.S. economy, but profits under pressure. No doubt about that. This article was on the 26th. The U.S. growth slowed in Q4, but not as sharply as previously estimated. And we want 1.4, the annual rate. That was what we just went over that. A little commentary. The consumer is back in the driver's seat. There's no sign of recession. NSD, no doubt about that. This will put a smile on the Fed officials. This is from Chris Rupkin, chief economist at MUFG Union Bank. It's in New York. Face and argue their policy for gradual interest rates. GDP growth initially estimated to have risen 0.7. The economy grew at 2%, a pace in the third quarter, and expected 2.4. Consumer spending, which accounts for more than two-thirds of the activity, rose 2.4%. A little bit better there. We just went over that. Gasoline prices around $2 a gallon also helped underpin household discretionary spending, and in some places it's still there. And of course, the market was closed for Good Friday, and so was the Treasury. Businesses accumulated $78.3 billion worth of inventory, rather than the $81.7 billion reported last month. So they did better. In other words, faster. Second here. First quarter GDP estimates are around 1.5, but inventory piles still larger, and shipments of capital goods ordered by business weak in January and February. The risks to growth are tilted to the downside. There's some bad news in the GDP report with corporate profits. We talked about that falling for the second straight quarter. Profits after tax, inventory valuation, consumer adjustment declined at an annual rate of 8.4%, the biggest drop since Q1 of 2014, after falling 1.7% in the third quarter. For all of 2015, profits dropped 1.5%, the largest decline since 2008 after slipping 0.6% in 2014. Profits from current production fell 159.6 billion after decreasing 33 billion. We went over this something a little different here. Part of the drop was due to 20.8 billion transfer payment related to BP oil spill in the oil spill in the Gulf of Mexico in 2010. 6 years later, was the largest ever offshore spill. But even accounting for the spill settlement, which transferred 83.2 billion, rate of decline in profits and earnings was still weak. Profits for the rest of the world, we are going over that. Manufacturing profits tumbled 139.2 billion during the last quarter, falling by only 4.1 billion in the July to September period. Profits in petroleum and coal production sector plunged. This is something we didn't have there. 124.3 billion after rising 7 billion in the third quarter. Poor performance reflects the energy firms struggling there, no doubt about that. The dollar gained 10.5 last year versus the currencies of U.S. Main trading partners, putting a squeeze on profits. About 60% plunge in crude oil, we'll get to that in a minute. As we do the numbers, a high of about $100 a barrel. That was in 2014. So things have definitely changed of there. Let me just grab a story we've had sitting around here. We can find it. Energy workers, and this is from Reuters too. The ride to the bottom, U.S. energy workers hit hard by company stock bets. 15 years since Enron collapse. Retirement accounts of its employees, hundreds of thousands of energy workers remain precariously exposed to big concentrated bets on company stock. The 401ks, we've always opposed those. The slide in oil prices to their lowest level over a decade wiped out several billion in retirement income in the energy sector. The losses may prove temporary for companies that successfully navigate the crisis, but tens of thousands of workers struggled, seeing much of their nest egg gone for good. In Oklahoma and Texas, workers are delaying retirement, surrendering trucks, cars, and land in personal bankruptcy cases, are just praying for oil prices will recover. I didn't see it coming. That's from somebody named John Thompson, who was laid off in February from Sandridge Energy in Oklahoma City. Sandridge shares, which have peaked at about $65 in 2005, the Hard Depression, are now worth 10 cents. Because of this, I'm not retiring anytime soon. I bet he didn't. Almost without exception, in the country's 401ks plans offered at least 10 different investment alternatives to the company stock. Their plans showed, yet company reports and interviews with more than 20 current workers at the independent energy firms show the workers had not taken advantage of the opportunity to switch out of company shares. Foolish. Chesapeake, which you heard about, this is somebody named Marlene Nelson, who retired from Chesapeake Energy in 2013, said she lost $100,000 as she watched the company's shares plummet. Of course, the ex-CEO plummeted with it, so to speak. Many energy firms have continued to match workers' contributions with stocks, even as large as U.S. corporations. stop the process after the Enron debacle. The energy industry allows the lead of heavyweights such as Chevron and ExxonMobil, which for years provided matching contributions in company stocks in 401k plans, which also funded separate defined benefit pension plans for them. The best way to go, smaller companies that could not afford to do both, but they typically matched employees' contribution in stock, which is now worthless. Typical workers at large energy corporations would have about 20 to 60% of their assets in the company's 401k, according to Reuters. Such holding for more than 400,000 workers. By contrast, the average U.S. 401k plan has about 7% of the assets in company stock, according to a DC-based investor company institute. Chevron stopped matching in company stock last year for better diversity. Enron stopped new stock contributions after 2006. Its shares still account for $12.9 billion in 401ks, $22.3 billion in assets in 2004. No comment from them. After Enron's collapse, companies successfully lobbied Congress, mostly against proposals to limit the stock ownership for 401ks. And according to Sheila Blair, caps were a bridge too far for these companies. And a Treasury official who worked under G.W. Bush, Sheila Blair, champion for working people. Diversification has yet to reach much of the energy sector. The oil and gas workers have more than $32 billion in company stock in their 401ks, about 38% of the plan assets for 40 companies. That's in the S&P 500. According to the annual report of the U.S. Labor Department, since then the index has lost 21%. Smaller independents have been hit twice as hard, no doubt. Chesapeake, once the slave boom darling, now trades 84% below the mid-2004 levels, hit by heavy debt, prolonged slumps in natural gas. Nearly 8,000 participants in their 401k are exposed to reverse of fortunes, including 35% of the plans, $615 million in assets. That was in 2014. Nonetheless, some current and former workers said their decision to hold on was based upon the revelation of Audrey McClendon, his legendary former chief executive, who obviously died in the crash. You could be the biggest skeptic in the world, and you listen to him in a room. Well, as they say, old Audrey went out in a flame. The Supreme Court decision in 2014 underscores the risk of offering company shares in 401ks. People should listen to this. The decision was made clear that company stock was not automatically a prudent investment. The ruling also highlighted potential conflicts of interest for the companies in their role as fiduciaries. Very important there. It was a wake-up call to companies. That's from Bill Ryan, Chief Fiduciary Officer at Evercore Trust, the largest U.S. third-party fiduciary. In Fort Worth, they have something called Quicksilver Resources. Evercore Trust took a rash step to block further employees' investments in their 401k in October of 2014. As a fiduciary for the stock, the move preserved some value, but not much there. The stock was liquidated. Liquidated company shares that already had fallen to about 50 cents from $3.50. Ew. Blair, now a college president, said that with heavy stock concentrations in their 401ks should follow peers that have caps there. It's another failure like Exxon. Government regulations may be coming. That is from Blair. I assume we're talking about the same Sheila Blair that was at the helm. Was a legendary person out there. And let me very quickly look this up. Yeah, she's a president now of Washington College in Chestertown, Maryland. She used to be chair of the U.S. Federal Deposit Insurance Corporation. And as they say, so it goes. A good person, no doubt there. And she was one of the fighters for working people in these various disputes. Let me move on here and get the rig count from Baker Hughes. This is on the 24th of March. The count is 464. That's down by 12. And the change from last year, 584 in the U.S. In Canada, the count is at 55. That's down 14. And as of the 18th of March, the change was 65. On the world stage, 1,018 rigs out there in February of 2016. And that is down 27. And in January of 2016, the change from February of 2015 was 257. So that's sort of how the industry is going and gone, as one would say. Let me just check and see what else we have here. We've done consumers, and we finished that up. So we'll go and do the numbers now. Good time to get to the BBC and do also the international part of the broadcast. Holiday weekends normally are a little bit more on the quieter side of life, but not necessarily. Boy, having all kinds of little problems here. Anyway, we'll get to it in a second here. The BBC changed its format, and usually we already have the BBC up, but the BBC is not up right now. I will get there. Batman versus Superman takes 422 million globally. Al Jazeera lays off 500 workers. That is in Qatar. Hard times there in Qatar. It's been a big a problem going on. I think we'll cover this because of its importance, at least symbolically, in media. It's funded by the Qatari government. It was founded in 1996. Has 70 bureaus worldwide. Al Jazeera, America announced this year it shut down its cable TV show. We used to watch it quite a bit when it had to take cable TV show in the U.S. here. It caused some problems. You needed to get the cable package, which we did not have. And let's see, we've already did Superman here. One of the old venerable magazines, Playboy Empire, reportedly exploring a sale. That would be unthinkable. when I was in university, but now, who knows? The Playboy empire could fetch more than $500 million, 354 million pounds. That was quoted by Financial Times and the Wall Street Journal. They've stopped publishing nude photos. Investment bank Moelis and Company have reportedly been hired to handle a sale process. The founder, he founded in 1953, Hugh Hefner. Playboy, let's see. The companies, they went private in 2011. The Playboy Mansion, famous, obviously, for its decadent parties, has an asking price of $200 million, including a lifelong lease for jackets worn by Hugh Hefner. This is just too much of a story not to put on a Facebook page, and we'll throw it up there. But when Playboy itself's up for sale, it's a very interesting situation. We'll go to the market data now and do it. The BBC Global 30, this is on Sunday, is at 0.06. Most of these will be on Thursday. The FTSE, all shares down 48.005. In Amsterdam, they were also down on Thursday, 5.87. In Frankfurt, the DAX was down, let me see, 274.10. In Paris, they were down 94.30. In Brussels, 59.63. In Madrid, 137.30, all on Thursday there. And in Zurich, they were down 118.78. In Moscow, they were down 0.44. This is on Friday. In Johannesburg, on Friday, they were down 294.82. In Bombay, on Wednesday, in the positive, 7.07. In Karachi, on Friday, 46.11. In Colombo on Friday, they were down 45.11. And in Lahore, in Colombo, 18.96. And it was on Thursday. And in Tehran on Wednesday, 181.60. In Sydney on Thursday, they were down 52.70. The Nikkei on today is down, is up 131.44. Hang Seng in Hong Kong on Thursday, it was down to 69.62. In Shanghai on Friday, 18.46 in the positive there. And the Dow on Thursday, 13.14. And the Nasdaq at 4.64 on Friday. The Merck on Thursday, a negative 0.77. In San Pablo on Thursday, they were down 32.66. And in Mexico on Wednesday, 15.28 in the positive. On to the commodities. Brent crude on Thursday, down 3 cents at $44.44. The spot was at $40.06. And West Texas Intermediate crude oil futures were down 33 cents at $39.46. T-Boone Pickens jumped for joy. Remember, it's $15 a barrel oil. Gold, nothing for gold. I'll skip it. And finally, the Unex, the Life futures. And what do we have here? Cocoa unchanged. Corn futures up $1.75. Robusta coffee futures down $21. And the Bloomberg Commodity Index that was on Thursday was down 0.32. And 79.25 there. This will do it for us, for the consumer. Keep your eyes on the ball in the coming week, and also on your 401k plans. If they're invested in your company, see if there are options out there, particularly in the energy sector. You need to look very, very carefully and follow the direction of Ms. Sheila Blair.